Okay, so hello guys and welcome to this video. And I just recorded a 30-minute video on currencies. And while I was recording the video, I just went on Twitter and I'm like, okay, let me just go on Twitter just a bit. Let me just relax for like a couple minutes and work on the next video for you guys and the public YouTube channel where we're going to talk about mostly equities and other asset classes. And I was just like seeing my whole timeline filled with, oh, Bitcoin longs have been liquidated, da 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 da. I'm like, wait, what? So I'm like, let me go and check my positions on Bitcoin. Now, if you remember from the last time we talked about Bitcoin, I wanted to see price trade down once we close below that 4 hour swing low, which is this swing low down here. I talked about not going long up here. You wanted to wait for price to trade down into this and also open yourself to the possibility of a spike below the lows down here. So my position fully accounted for the spike below the low down here, right? I went long, like I gave you my initial analysis, and I wanted to, I allowed myself to accommodate for a spike down here. This is what I started my Wednesday with. Losses on Bitcoin. All right, so down 5K in Bitcoin. Not complaining whatsoever. But what you can see here, let me just explain the market structure narrative on Bitcoin. Now, initially I wanted to see longs on Bitcoin, and I had my spot bags in Bitcoin. Now, again, remember, spot bags are different from leverage trading, right? Now, the analysis I gave on Bitcoin was that we wanted to see leverage trades from down here and wanted to see higher prices. But what you can see here with Bitcoin, absolutely, is you're seeing this market just absolutely tank. Now, what is a bit weird with this asset is we wanted to see higher prices in gold. We have seen gold has just been parabolic so far, right? Oil has also shown a really nice recovery. I'm going to talk about oil because I gave I gave levels to the members on the private Discord to buy from on oil. But Bitcoin is just the one asset which I cannot really nail what is absolutely going on with this asset. Now, in my opinion, I do think that this is a bearish market. This is what I believe in Bitcoin right now from what we've seen so far. And I'll explain why from a technical standpoint. So what I'm going to do here is I'm going to talk about Bitcoin, then I'll go over to currencies, dollar, not currencies, right? I'll talk about dollar and, of course, the equities market and gold and oil. But if you look at Bitcoin right here, so you can see we have this overall consolidation, which I drew your attention to previously, right? And I talked about the possibility of us breaking out of consolidation, kind of like a power of three play type manipulation, and seeing the market want to revisit sell side. But at the time, we saw an initial spike above the consolidation profile. Price returned back down to this bullish order block. We're looking for a bullish expansion away from there. We did get that really nice bullish expansion. But what you can see here is we failed to trade through that bearish fair value gap, right? So the narrative for me here on Bitcoin is that all of this run above the consolidation was a manipulation. And what we're seeing now is we're seeing the market wanting to pricing the low end of that consolidation, which of course comes in around 80K, right? So which is why I do think that the next level we're going to on Bitcoin is $80,000 for Bitcoin, which is unfortunately so sad. If you only trade crypto, you're probably going through it right now. Absolutely. Now, I am thankful. Again, I'm not trading crypto. The one advice I gave at the start of the year was you need, in this current climate, you need to expose yourself to multiple assets, multiple asset classes, right? You can not only trade currencies, you can not only trade equities or futures, right? For those guys who trade futures, you have to learn to go and add more asset classes. And what you do is you pick and choose when to take trades. I'm not saying go and add other asset classes so you have more assets to trade and you go in every single day and you're trading every single day. what I am saying, or the reason why I advocated for this, is because there's gonna be times where if you're only trading currencies, you might probably not get really clean moves in weeks. That's a strong possibility. We saw that last year, multiple times last year actually. And the same thing also goes for equities, right? And the same thing also goes for if you're only trading crypto market, for example, where you can see the whole time, and that was since October of last year, it's just been a freaking bearish market. And I do think we continued the sell off in Bitcoin. And I do think the loss for me is a lesson. Again, I'm not paying whatsoever. It is part of what we do, but I did have a loss on Bitcoin, right? So it is what it is. I do think at this point right here, we're going to visit 80K on Bitcoin. And if we close below that low, right, then absolutely 72K is a major level. And the reason why is because all of the swing higher initiated from the slowdown here. So if we see a closure below the slowdown here, then that to me is confirmation that we're going for the sell side liquidity down here. Now, how we react once this happens, I cannot wait to see what the timeline is going to look like when that does happen, right? So, at this point here, I do think that we've shifted into a bearish market on Bitcoin, and I do think all of this consolidation and the initial run higher was to suck in longs to go long. Now, thankfully, we went long at a relatively discount level, right? But still took a loss in Bitcoin, and for now, I do think we've flipped to bearishness. Now, what we are looking for on Bitcoin is I want to see how we close on this daily candle. All right, so we see how we close on this daily candle, and what I think is more likely is we have a fair value gap in here in Bitcoin, right? So I will mark it out like this. So that is a daily fair value gap on Bitcoin. So that is 1, and that is 2. So I would expect we close below the fair value gap, daily fair value gap, and then on the new opening candle, we retest that fair value gap. So let's go in the forward time from just a bit, just to see what it looks like. All right, so I would expect a retest of this bearish fair value gap. Again, also opening to the possibility, or open to the possibility of the market revisiting this down candle. All right, so I am focused on this one because this is where we start to see the one-sided displacement higher. So this would be a breaker block, right? So I'm focused on this down candle. Now, if you look at this down candle, you can see we have a 4-hour bearish order block in there. Now, this would be a secondary level where should we retrace up into, the market should sell off. The first and major level I want to see is that daily inefficiency. All right, so once we close through that daily inefficiency, I would expect that we retest around 89K and just sell off and continue to sell off into the 80Ks on Bitcoin. Again, nothing to fear here on Bitcoin. If you spot trade a Bitcoin, then you have to understand it's gonna take a while longer for you to eventually realize profit in your bags. Same thing does happen with buying stocks, where you can probably wait for months. So with stocks, it's like years. Now with crypto, maybe not that timeline, right? Not to that scale, but just understand that you're gonna have to wait a while, right? Because I don't think Bitcoin is going to just continue to sell off. I do think eventually it'll flip and go up, but at this point here, I do believe that we are in a bearish market, not a long-term bearish market, but I do think we're in a bearish market. And until we get to around that weekly sell side I talked about, which is around 74K in Bitcoin, I still am looking for a weakness in Bitcoin. And also the reason why I like that level is because this is a weekly fair value gap, right? So that reaction from there in Bitcoin from that weekly fair value gap, you can see the way we completely invalidated this potential weekly propulsion block, right? So that completely neutralizes the idea of longs in Bitcoin. And I do think here we flip short on Bitcoin and we're looking for 80K on Bitcoin. And that is what we're expecting right now. Now, let's move on over to oil. Now, with oil, I talked about the fact that we're looking for higher prices on oil. The lower entry level I give on oil was this 4 hour or 1 hour volume balance, and that was from I think that was from 2 weeks ago. Now, what I told the members yesterday was to do like a split position, right? I decided to have some positions on oil from that daily volume balance. I'll show what it looks like on the daily time frame. And the reason why is because there is a strong possibility we don't even trade to that lower level. Now we've seen a really good feedback on the first longs we've done on oil from that daily volume balance, right? Now I'm not gonna do any more buys here until we see the market trade above the high from Tuesday, right? So if we trade above the high from Tuesday, I do believe that confirms a resumption in longs. Again, all of the whole time the market was in all of this, I kept reiterating that it was just a retracement. It was not a bearish market, right? I do think we see all just absolutely turbocharged higher. And, I am glad that myself and the members, we did have a position on oil. I just wanted to give you guys a level where you can look to get in on oil. So this is a good level, actually. This 4 hour time frame profile, you can see we've gone into this 4 hour buy some sell side efficiency along with that daily bullish volume balance. I do think from this 4 hour bullish order block, that's a good level to go long on oil. But again, I want you to also open yourself up to the possibility of a spike down here. So I still have a limit order, although not a full size position because I have more of my position from that daily volume balance up in here, right? So if we see the market spike lower, then I can get a feeling on the remainder of my position. If the market does not spike lower and instead breaks above the high from Tuesday, then I will look to add even more positions on oil and scale in. And I will do a short video talking about how I will scale in and stop placements and all of that. But again, this is just me saying this is a good level to go long on oil, right? So that's a really good level to go long on oil. Now, what absolutely just messed up Bitcoin compared to gold is the fact that if you take a look at gold versus BTC, you can see that it's just been absolutely parabolic. And I think the reason why we're seeing something different is because you have to think about who are the people who are doing the most volume transactionally in terms of the global market. It is institutional investors, not retail investors. I know the crypto bros like to talk about the fact that they're starting to see institutional adoption of crypto and Bitcoin and all of that. But again, it's not really to the magnitude of other asset classes like currencies, other asset classes like commodities, other asset classes like equities, right? So when we have a situation like this, where we have a massive geopolitical event and we have a massive, just a flurry of events where Trump wants to invade Greenland and the European nations are saying no to that, and they're deciding to want to dump bonds and they're trying to build trade relations with China and all of that. I do believe that most investors would seek to protect their investments, whatever risky investment they're into. They would seek to protect those investments by seeking a safe haven asset. Unfortunately, Bitcoin is not a safe haven asset, which is why it makes a lot of sense that we're seeing this parabolic rise in gold, because we're not in normal market conditions. We are in a situation where there is a lot of uncertainty. We're starting to see a lot of investors come out and say they don't really trust the what is the word? They don't really trust there's no assurance in terms of the fiscal policy with the United States because Trump is really erratic. Again, I know some of you guys might be his supporters. I don't care whatever political lineage you're on. That's none of my business. My job is to make money, right? Even though I lost money today, but my job is to make money, right? And it makes a lot of sense that we're seeing gold just go parabolic against Bitcoin because we're seeing a flight to safe haven. Like everyone wants to move to safe haven assets, and that's why we're seeing Bitcoin go parabolic. And I also do think that yeah, we just continue to see that rally higher. And for now, I do think that we see lower prices on Bitcoin until all of this is settled, and then we can, resume with bullishness on Bitcoin. But for now, I do think that we want to go for 80K and then eventually 70K on Bitcoin, which is a bit sad, right? But again, you have nothing to really worry about if you have it on your spot bags. I just think that is more opportunity for me to add to my spot bags on Bitcoin, right? Okay, now let's go and talk about equities because I spent 30 minutes on the last video and I am so fatigued because it is currently 1:30 a.m. for me right now. Now, before I talk about equities, let me just go and talk about dollar real quick and talk about my analysis on dollar. So I might potentially end up having to repeat myself because I already covered dollar on the last video, but here we go. So we wanted to see, or the analysis I gave to the members on the private Discord from Tuesday or Monday was that we wanted to see a really strong sell-off in dollar that takes us down into this daily bullish red valley gap and also the body of this daily bullish order block. That has happened so far, delivered to perfection, right? Because we also wanted to see that sell-off occur from, let me go on the 1 hour time frame profile. We wanted to see that sell-off occur from this volume imbalance. You can see we had a gap here, this market gap. We want to see the market sell off from there into our level, which it has done so far. That is cool. Now, I talked about the fact that we would see lower prices on both dollar and T-bonds. Now, let me explain the correlation between dollar and T-bonds real quick. If we're seeing lower prices on treasuries, we want to see higher prices on dollar. That's normal correlation. But again, yesterday or 2 days ago, I talked about the fact that we would see lower prices in dollar and consequently also lower prices on T-bonds or charges, and that was mostly due to the tariffs. Now, let me explain something real quick. There is normal market conditions where institutions come, sponsor market, and all of this all revolves around central bank policy, right? And also interest rates. And then there's also another market where a lot of the institutional action is a reaction to geopolitical events like COVID, for example. So if you go back and study the charts during COVID, so what I'm going to do here real quick is we're just going to go back to around 2020, March 2020, which is like peak COVID period. All right, so let's just go back to 2020 real quick. And this is COVID. I remember all of this. This was COVID, right? Now let's go and pull up 10-year T-notes, all right? So we're going to pull up 10-year T-notes and see how that coincided with dollar. Now what you can see here is as we ran lower on a dollar, T-bonds absolutely rallied higher. 10-year T-bonds absolutely rallied higher, and most likely the same thing for 30-year T-bonds. Bullishness on 30-year T-bonds, we saw all of that during, I think COVID was around, was it March or early January, I believe. I think it was around like early January to like March, where we saw just insane lockdowns. Like there was lockdowns, and you can see Treasury started to go higher, yield started to drop, and lower yield equaled just lower prices on dollar. And we saw just wonderful, beautiful delivery on a dollar. Now, what you can see recently, if we move on over to recent price action from COVID into what we're seeing currently, let's just go back a bit, right? So you can see from around late November on dollar, we started to see lower prices on DXY, and we also started to see lower prices on treasuries, right? So that really does not make a lot of sense, because if we want to see lower prices in treasuries, we want to see higher prices in dollar, because lower treasury prices equals higher yield. Higher yield should equal, ideally in a normal situation, it should equal higher currency prices, aka higher dollar prices. But we did not really see that. Now, we saw lower prices in dollar, and then for the rest of, December going into the new year, we started to see just a consolidation, right? Huge consolidation on treasury notes versus the dollar. Now, the one thing I am certain of is that we will continue to see lower prices on treasuries, right? So I do expect lower prices in treasuries. Now, I already pre-anticipated all of this. I gave an analysis, and for the last couple of weeks, we were looking for lower prices in treasuries, and now we're starting to see that. Now, that was facilitated by a lot of institutional investors, especially from Europe, deciding to want to dump their United States treasuries because, according to them, they do not really have faith in the United States government and their fiscal policy and also their actions in terms of Greenland, because Greenland is a part of NATO, right? Now, I do expect continuation lower on treasuries, but I do think there's a strong possibility we also see lower prices on DXY. Now, my initial analysis from Monday was I wanted to see a sell-off on dollar that would then lure in retail to look for shorts, and then we flip from there and go long. At this point, I'm not really so sure that we see that flip and we go long. I think there's a possibility we could potentially go lower on dollar. I also think there's a possibility we could go higher on dollar. So it's a bit of a head scratcher right here where there are two possibilities with DXY. This is the main problem for me with dollar, right? Trump has a speech tomorrow or today. It is Wednesday currently for 8:30, right? So Trump is going to speak at the World Economic Forum, and I would advise you don't take any new positions. All right, maybe bar U.S. oil, which I did talk about, and potentially Bitcoin, because I don't think there would be. Bitcoin does get affected with Trump speaking, but I do think the major impact would be currencies and also the equities market, right? Now, for equities, I expect lower prices in equities. I do want to see equities continue lower, right? So, following with my initial analysis, nothing has changed so far. I do think we continue with the sell-off. Now, I just want to remind you, the sell-off on the equities market is not the start of a bear market. Okay, I believe it is simply a graph for sell liquidity, and we flip and go higher from there. So that is my current expectation. Now, if that does change, I will make a video and talk about the fact that my narrative has changed. Again, I do think for now we didn't really fill in the gap on the equities market. Instead, we continue to trade lower, and then when we resume that bullishness, eventually, we come back and fill in all of this gap we've seen with the S&P market and Nasdaq, and also the Dow, right? But for now, the narrative still stands. I want to see the Dow go for sell liquidity and down into daily bullish value gap, and same thing with Nasdaq. I mostly have this volume balance. Now, are we going to see bullishness from that volume balance? I'm not so sure, right? But my major downside target objective on Nasdaq is when it's in market trade out here, and then we will have to reassess what the next objective is for the equities market. So I do believe that it is straightforward in the equities market, right? We want to see the gaps remain open, right? That's the most ideal situation. Open gaps and continue shorts lower. So if I just refine just a little bit to the far time frame profile, right? So for the S&P market, I like the idea of this 4-hour bearish order block as a level where we should see continued shorts from. 4-hour bearish order block and also fair value gap are good levels that we can expect some shorts from on the S&P market, and also for Nasdaq. Again, I would prefer we don't trade up into that gap yet until we take out sell liquidity. Now, if we go just a bit to the left, we had a volume balance in here. So look how when we trade below that, now remember volume balance has an absence of both buy side and sell side delivery. So watch how we re-deliver and rebalance the volume balance after we trade through or we deliver sell liquidity, right? So that to me means that we don't want to revisit that volume balance. If we trade back up above the side here, I think we're going back up for the S here. And I know that sounds drastic because I'm currently looking for lower prices. That's why I don't want to see the current price action trade off into the gap or trade through the volume balance. So I think ideally, again, with the equities market, just like the S&P market with Nasdaq, we sell off from here, continue to sell off from here, and trade down into that lower target objective, right? Now for dollar, here's the deal with dollar, right? I want to see lower prices on DXY, and ideally, what I want to see is if you look at this eye here, this was the last major hyper to run higher. So this is our breaker block, right? So I want to see dollar sell off from that breaker block, ideally. Now, I would not be engaging with currencies, right? Majors, especially, which is what I spoke about on the last video, until after 8:30, because with Trump speaking, risk is really elevated, really elevated, because Trump, you know what Trump can do, right? The markets just go absolutely crazy. So risk is elevated with Trump speaking, which is why I prefer not to engage. And I would rather study and monitor my sentiments going into Trump's speech, and then I would also be live streaming, of course. So we would live stream at 8:30 as usual and see whatever happens to the market, and then we will follow up from there, right? So, but so far, beautiful delivery across the board on currencies. We really nailed currencies in terms of the delivery, right? And so far, we've seen a bit of a positive feedback on oil, and we also nailed. Oh yeah, you can see oil started to just go parabolic. Let's see if we get a good recovery today. And we've nailed literally every asset except Bitcoin related assets. So gold versus BTC and also Bitcoin. All right. So now just to wait for that closure and see if we continue the sells from that fair value gap, that daily fair value gap. Let me just go to the daily time frame. Right. So if you're wondering what the purple lines are, daily fair value gap. Right. So if we close through the inefficiency, then that daily fair value gap, and also on the forward time frame profile, the for our order block, which resides inside of this breaker block, is also a good level, right? So that's gonna be all for now. I will see you in the next one, and in the meantime, trade safe. Peace.